We're sitting down with Thomas Borrel, the Chief Product Officer of Polymath at the Blockchain Expo North America. Thanks for sitting down with us, Thomas.
Thank you for having me, and hi everyone.
Great. So have you been to Silicon Valley before?
Yes, I have been to Silicon Valley before, more times than I can count. I started my career in telecom, and so I guess that's about as good an explanation as can be, right? There's a lot that's happening on the telecom front here in the Silicon Valley. So I've been visiting San Francisco, Palo Alto, San Jose for the last 25 years or so.
And are you based in Toronto?
Yes, so I am based in Toronto. I've been in Toronto for now close to 20 years, 18 to be precise. It's a great place. It's been a great move, and it's the birthplace of Ethereum. So it's a good place to dive into blockchain.
Where are you from originally?
So originally I'm from France.
Oh wow, okay.
Yeah.
Great. I'll be going to France next year.
All right, good.
For Paris Blockchain Week.
Oh, I'll be at Paris Blockchain Week as well. Yes,
Excellent.
I'll be there. Yeah.
Great. So could you explain the transition? You mentioned you were in telecom. Could you discuss working in that industry and transitioning to blockchain?
Sure, absolutely. So, what got me to blockchain, at the time I was working for a networking company, and for that networking company I was responsible for the cloud offering and the software offering. And so, the engineering team was looking at some licensing mechanism to help us deal with the ability to elastically increase the capacity of the software platform. And so if you had sort of an influx of traffic and you needed to move your management and your analytics from a on-premise to a cloud-based, you could do that dynamically, but without having a licensing problem, without having a double spend problem. And so, that's that whole idea of preventing double spend. People have solved that problem before, and so we started drilling into blockchain, and I caught the bug, and I dug deeper and dug deeper and dug deeper, and met Trevor Kverko, founder of Polymath. Had a great couple of meetings with him, and I got back home, and on my way home I just thought, there's two ways I can approach this. I can fast forward 3 years from now and say, look, I knew this was going to be big, but sit in the sidelines, or I could just strap myself in front of the freight train and just have wind blowing past it and just go. Let's not watch the train go by. Let's jump on the train and be at the forefront of it and just make things happen. And so it was an easy decision. Here I am at the front of the freight train.
Is there a big difference between specializing in products or focusing on product development in wireless, IT, or other traditional industries and blockchain?
Yeah, there is, and so specifically for what Polymath is doing, there is a lot of differences. Polymath is focused on security tokens. So what we do is build the infrastructure for any organization to create their security token, distribute their security token, and have that security token trade in compliance with the regulation associated with the asset and the holders of the asset, as well as over and above that deal with corporate actions, do capital distribution, do voting, all on-chain in an automated and efficient way. And so once you start touching security tokens, there's immediately regulation that comes into play. And so when you look at the world of wireless, when I joined, there were clear standards, there were clear regulations. So it was about delivering value on top of a technology that had reached a certain level of maturity, and you had a whole regulatory framework around how frequencies are managed, for example, that was well established, well understood, and already right down into the chipset. Blockchain, and specifically security tokens, is very different from that. We see regularly updates to regulation or clarifications from regulators depending on the jurisdiction you're in. But we've seen the UK, Singapore, Hong Kong being very active in that front, and so you have sort of an infrastructure that's new, that's nascent, that's just a few years old, on top of which that whole ecosystem of security tokens, so token creation, token distribution, all the regulated entities that have to be involved in the issuance of that asset, whether it be in broker-dealers, exchanges, custodians. So you have that entire ecosystem that sit on top of a brand new infrastructure and the regulatory framework that is not always very, very clear. And so, some of the core principles, if you will, of agility and understanding what your clients want still apply. We operate being client-led. We want to make sure we understand what issuers want to do, what regulators want, what market participants want out of security tokens, so understanding the market. But then there is this constant update that's happening to both the technology itself through maturity and new projects being developed, as well as regulation. And so it's kind of being on the very, very early days of wireless, but several orders of magnitude faster and several orders of magnitude more complicated. And that's what makes it fascinating. And I'd say, the last thing on this is, wireless has changed our life in one way, and actually more ways than one. When we look at the impact that security tokens can have in the world in terms of inclusion, in terms of wealth, I believe that the impact is going to be even more significant, but that's just my own opinion.
I saw you tweeting about ERC 1400, correct?
Yes.
So what is that?
Yeah, so, back to the maturity, right? So we talked about wireless having its own standards. When we started working in security tokens, late 2017, early 2018, there were no standards. And so at the time, we were already engaged with market participants, right? Going back to being client-led, understanding what all the different players in the issuance of an asset need. We were very quick to identify that those market participants were suffering from a lack of standardization, and so that lack of standardization manifested itself in a tremendous effort in the technical due diligence of all assets that they wanted to list on the exchange. And so if you look at this and you go, okay, we want to build a system that's more efficient, we want to build a system that can be more automated. If the technology is not standardized, we're just creating a different problem where there wasn't one before, as opposed to solving problems where they are. And so we took it upon ourselves as a team to bring 25 different companies, from law firms to broker-dealers to exchanges, custodians, KYC providers, former regulators. We brought everyone to one location and said, let's all forget who we work for. Let's talk about security tokens and how we can create a security token standard. And so out of this came the ERC 1400 proposal that was submitted to the Ethereum community in September of 2018. Since then, we've implemented it. We've seen other organizations implement it, even one government implement it as well, which is fantastic, right? That's what you want, is getting to a point where you can go to an exchange like a regulated security token exchange or a regulated custodian and say, I'm going to issue an asset. That asset is going to be ERC 1400 compatible, and they can say, check, technical due diligence done. Let's move to the business due diligence.
So a couple questions. Which government implemented?
So Norway. Norway had a project a couple of months ago where they used ERC 1400 for that. It was very exciting for us to see that type of action being performed.
And then what was the meeting like? Were there like round tables? Were you at a secret location?
So it was not a secret location. We're actually in Barbados, which for all intents and purposes actually was a clear demonstration of the commitment that everyone made to standardizing security tokens. Because imagine this, it's July, you have people flying from all over the world, they get to Barbados, and for 2.5 days, they're going to be locked in a room from 8 a.m. to 9 p.m. when it's beautiful and sunny outside. You can see the ocean out the window, but no, there's no ocean. We are here to build a standard. And day 2, we actually had more people than we had day 1. So not only did everyone come, but they invited additional people that were in town to help with the initiative. And so it was, it started with a few presentations where we sort of presented where we saw some of the challenges, solicited everyone's opinion around this, and then we formed a variety of working groups to tackle specific issues around how can we deal with freezing assets, how can we deal with reclaiming assets, or someone who's lost their private key, or any type of a legal action that a transfer agent has to execute upon. How can we do that in a security token world? And so we had small tables of different specialists in the area sort of collaborating and putting this together, and then out came the proposed standard.
So once we have these standards, like what does that make possible?
So for us, the way we look at this is it eliminates a lot of friction. And when you talk to financial institutions, the world of finance is built on standards. SWIFT, ISO 222, there's lots of standard that allows those different banks and different institutions to communicate with one another in a predictable, replicable, simple way. So as we embrace the standardization activity and deploy that onto a chain, what it does is it significantly simplifies the on-ramp and off-ramps of those digital assets into a variety of regulated systems that are going to be there to either provide some type of a custody, some type of a trading venue, whatever the case may be. And so, we're continuing our efforts on the standardization side. Recently, our team proposed a new ERC around, so it's an Ethereum request for comments. And so they proposed one around how to maintain universal beneficiary ownership, so UBOs on voting rights. So how could I have my asset custodied by a custodian but still be able to vote without the need for any type of proxies? And so we see the standardization efforts, and we're part of a variety of standardization groups, as being absolutely foundational to build a strong and scalable financial infrastructure that provides the right framework for security tokens to grow.
And just to elaborate, so the ERCs, they're Ethereum requests for comments, and that's the process by which developers or ecosystem participants put forth new types of tokens.
It can be types of tokens. It can be a variety of changes to either to the Ethereum chain or new asset classes. So one of the most famous ones is ERC20, which is what created tokens effectively. So that's one of the more famous ones. There's been several others around identity, around non-fungible assets, but it's effectively a vehicle for the community to propose either a standard or a change into Ethereum.
That's great. So I'm curious a little bit about, there seems to be like people who are interested in making new tokens and people who are interested in kind of laying the plumbing or groundwork for those things. And Polymath is really focused on these standards.
So what we're focused on is building the infrastructure for anyone to create their asset, distribute their asset, and then perform corporate actions on those assets. So we have decided to focus on the software and the standardization of this software and build on top of it an ecosystem of business partners that allows anyone to in full compliance create their token, distribute their token. So what that means specifically is we have built an ecosystem of broker-dealers, exchanges, custodians, law firms, cap table management solutions, KYC providers, etc., that anyone who comes to the Polymath platform can apply for their services, get some help in the tokenization of their asset and the issuance of that token, and then provide secondary market, like a secondary trading venue in the case of an exchange or an ATS. So we see sort of that marketplace, that ecosystem, as the way to scale. Today we have over 45 business partners that cover a dozen jurisdictions. So we decided that we were not going to be those roles, or we're not going to be those regulated entities, where we're going to provide a standardized set of tools with known connecting points to other market participants like KYC providers, like exchanges, like custodians, so that the broker-dealers, the law firms can, at scale, tokenize assets for their clients.
It's interesting. It seems like there's been a steady evolution in Polymath, and as you've learned more about the space, as we've all learned more about the space and what is needed, you've been able to adapt, which there's always a lot of emphasis on startup ideas, but perhaps the ideas are less important than the ability for teams to adapt quickly to the markets and respond to those markets. You've done some research into Polymath, has done some research into like decentralized exchanges and security tokens. What have you found?
So, in terms, from an exchanges and security tokens perspective, the market overall is still in build mode. So when you look at exchanges, the current sort of state of the industry varies based on the jurisdiction you go into. So just taking a few steps back, we had a tremendous opportunity to engage with a very, very large number of issuers, very, very large number of market participants over the last couple of years that we've been involved in the space. And so that engagement has given us the ability to surface those issues and address them. So we started back in 2017, 2018 to do market testing. Our founders had this great idea that security tokens would be the next evolution, if you will, of financial markets. And so we went into market testing, build sort of basic token capabilities, trading restrictions, etc. We saw a good adoption. We saw about 71 tokens created in the first 6 months. So we moved to the next phase, which was product market fit. That allowed us to engage with banks, that allows us to engage with institutions to understand, okay, great, you have the ability to tokenize a lot of assets. Those can be equities within the company, that can be real estate, that can be new structured products. There's a lot of options there. What are you looking to do? What would make a significant difference for you? And so out of this came the ability to automate capital distribution, the ability to automate voting, the ability to implement on-chain governance for those organizations around vesting schedules, around trading volumes, etc. And it also told us that we needed to expand across additional jurisdictions, specifically around Singapore and Hong Kong. From this came another sort of 50, 60 tokens. Distribution started coming. Not listings just yet, because some of those tokens had sort of a 12 months lockup, depending on the sort of jurisdiction and regulation under which you issue your token. You may have a lockup period for your investors, and for them it was the case. And so from there, we surfaced additional issues at the ledger itself. And so from that point forward, we understood that for the security token market to grow and for liquidity to happen at the exchanges, which effectively would be tied to institutions coming in and making big buys, so the order books at those exchanges would be significantly deeper. The liquidity would be significantly better. There are specific aspects of the ledger that need to be addressed. And specifically 4 core pillars. One is around governance. We have built on Ethereum, and it was a great place for us to do that product market fit, test the market and do that product market fit. But the governance that we see right now on Ethereum is a challenge. With the upgrade to 2.0, there's the whole idea of forking is a challenge. There was an interesting paper published by KPMG a few weeks ago that was talking about if you've issued an asset on Ethereum or any blockchain for that matter, as a fork gets announced, you need to bring a committee together and then decide what you're going to do with the fork, how you're going to communicate to your investors, how you're going to deal with it in a public and transparent and open way. And so we're looking at this thinking the whole idea of putting securities on the blockchain is to create an environment that provides way more transparency, way more efficiency, way more automation. And so if you have to deal with committees every time the blockchain is going to upgrade, which we know in the case of Ethereum is going to happen several times over the months and years to come, then you effectively solved a automation problem in one place and created an efficiency problem somewhere else. And so we thought that simply couldn't work, and that was confirmed by all the discussions we had with law firms and other market participants. So the first thing is governance. The second one is identity. You look at the chains that have embraced security tokens. Their initial ethos was more around building unstoppable applications or working with pseudonymous identities. With security tokens, it's a completely different world. You cannot touch a security unless you have gone through KYC and AML. And so we see that identity as being a foundational component to that ledger that needs to be built into the ledger for anyone to be able to first do KYC, create their account, and then access the assets. So you have governance, you have identity. Now, beyond protecting the identity of the investors, the issuers, and the market participants, there is also protecting the intellectual property of those market participants. So specifically, if I'm a market maker in a highly liquid market, my trades, my position are my intellectual property. I cannot have anyone look through my wallets and figure out what I have. And in the case of Ethereum, potentially front run me if I'm doing a trade on a DEX, on a decentralized exchange. So sure, you see several architecture on the exchange side that allow sort of with the Omnibus wallet that allow those trades to not be visible to everyone. But still, as the market grows and new architecture get deployed, we see this confidentiality of transaction as being a major issue. Of course, the tools have to be available for the issuer of the asset to know who holds the asset, so they have up-to-date cap table, as well as regulators to be able to understand what the trades are, and the market also to have visibility into trade volumes, do price discovery of the asset, and so on. So we see sort of privacy of transaction as a third key constituent, and the fourth one is compliance. We spent the last 18 months building on Ethereum. We've built some very complex logic, and as regulation continues to embrace blockchain, as multi-jurisdictional trades start happening, which is obviously our goal, right? As an industry, is how can we enable multi-jurisdictional trade without counterparty risk? And so, as this happens, you have more complexity in the trading rules associated with the asset. And so we got several times into the position where we actually couldn't code those rules within smart contracts because we were hitting gas limits, which means the business logic was just starting to get a little too complicated for the Ethereum virtual machine to handle it. And so we found ways around it. We found our team was very innovative in that respect. But as more jurisdictions get added, as more structured product get added, it becomes more complicated. And so having the ability to build that compliance right into the ledger and support those more complicated assets is a core tenet as well.
In a lot of ways, that turns the DEX as we've known it on its head.
In terms of DEXs, DEXs, as soon as you deal with the DEX, you need to make sure that the enforcement of any type of trade is going to be done directly at the token level. Because, and particularly for regulators, who do I go to if a trade was done improperly? It's a decentralized exchange, so who do I go talk to? And what are the tools at my disposal in order to undo a trade if I need to for regulatory reasons? And so what we see is as DEXs get more and more embraced, you need to have all the right tools and all the right business logic built right into the token for regulators to be able to revert transactions, transfer agents to be able to act upon court orders that they may receive. And so it puts more complexity within the smart contracts themselves, which is fine. We've been doing this for the last 2 years, and we know we can implement those. We have several of these rules that are live already, but we anticipate that as multi-jurisdictional trades come into play, there's going to be additional constraints that are going to be put on it, and we simply cannot be limited by the capabilities of the chain. We have to move into something that is purpose-built, so really move away from a general purpose blockchain like Ethereum, which again has been fantastic, like a great way to do that testing and that product market fit, into something that is built specifically for security tokens.
What's next for Polymath?
What's next for Polymath is building that chain that we just talked about. We announced that initiative at Consensus in New York early this year. We've been partnering with Charles Hoskinson, who's been a phenomenal help on the architectural side, and we have our team that is laser focused on building that chain. We're continuing our development on Ethereum as well. It's been a fantastic place for us to connect with the market, work with the market. To date, we have 162 tokens that have been created on the platform, which is great. So we want to continue that effort. But then the rest of the team is laser focused on building a blockchain that is purpose-built for security tokens, and that addresses those 4 core tenets of governance on the chain, identity, privacy, and compliance.
Thomas Borrel, thank you so much for sitting down with us at Blockchain Expo North America. You're the Chief Product Officer of Polymath, and we look forward to hearing more from you in the future.
Thank you, Justin. Thanks for having me.